Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. Aldar Properties and Arabtec Holding have announced the awarding of a contract valued at nearly 4 billion dirhams to an Arabtec-led joint venture for the development of the Abu Dhabi Plaza in Astana, Kazakhstan. The joint venture brings together Arabtec Holding and Consolidated Contractors Group SAL to develop Abu Dhabi Plaza, a 500,000 square metre mixed-use development comprising 5 towers, the tallest of which will measure 320 metres. Construction is scheduled to commence shortly and the project is due for completion in 2017. His Excellency Ali Aid Al Muhairi, the chairman of Aldar Properties, stated that the development is a vital part of a major development thrust for Astana and is testament to the commitment of UAE companies to support Kazakhstan as it pushes forward with its ambitious economic growth plans. The new project brings the total gross value of contracts awarded in 2013 to nearly 13 billion dirhams, which is anticipated to have a positive impact on Arabtec's performance over the near to mid-term. Etihad Rail is evaluating bids to connect key cities and industrial hubs in the country and link them to the Saudi border as part of the most important phase of the UAE's multi-billion-dollar railroads program. With the first phase of the program underway, the government-owned Etihad Rail has turned its attention to the key 628 kilometres of rail lines that will connect Abu Dhabi, Dubai and Al Ain and run to Wayfat on the border. According to local reports, tenders for Phase 2 have been submitted. Once all 3 stages have been completed by 2018, the UAE will be covered by about 1,200 kilometres of track, and the network is expected to boost the economy by facilitating the movement of goods and labour between the country's major industrial hubs of Jebel Ali, Musafah, Khalifa Port and the industrial zone in Tawilah as part of Fujairah's port outside the Strait of Hormuz. Dubai Exports, the export promotion agency of the Department of Economic Development, has recently showcased the Emirates' expertise and resources in Islamic economic services to the business community in Toronto and Vancouver. According to Emirates news agency WAM, seminars were conducted with the support of the Canadian Embassy in the UAE and the provincial governments of Ontario and British Columbia. The seminars were part of Dubai Exports' activities to promote the service sector in the Emirate to global markets and focused on encouraging linkages between Islamic financial and advisory firms in Dubai and their counterparts in Canada. Participants in the seminar also discussed the changes required in Canada's taxation and regulatory system to enable Islamic financial products to be treated on a par with conventional financial products. Statistics show that global Islamic banking assets have grown approximately 10% per annum from the mid-1990s, with industrial experts claiming that over the next decade the sector may reach $4 trillion. The Indian rupee managed to pare some of its losses last week following the announcement from the Reserve Bank of India that they would keep rates on hold this morning. The Indian rupee has come under immense pressure the past few weeks, touching a record all-time low of 59 to the US dollar on the back of a combination of a stronger US dollar and deteriorating Indian fundamentals. With much of the recent losses of the Indian rupee being attributed to the performance of the US dollar, the Federal Reserve is set to announce their interest rates this week. To find out more about this, we spoke to Gaurav Kashyap, the head of the DGCX desk at Alpari, Middle East, to get his views.
Well, Mirna, we did see the Indian rupee make some gains against the US dollar this morning following the announcement that the RBI was planning to hold their reserve repo rate as well as the cash reserve requirement for the Indian economy. Now, this has seen the Indian rupee make some gains against the US dollar, but overall markets will once again focus on Wednesday's FOMC meeting minutes released from the US. Ben Bernanke is largely expected to keep rates unchanged, but it'll be very, very interesting to see his comments with regards to future tapering of QE3. Now remember, back in May 22nd, Ben Bernanke really seemed to have delivered an early birthday present to markets when he said that a taper for QE3 program would be upcoming in the next few meetings. And all of a sudden, we saw equity markets tank, we saw the yield on US Treasuries increase, and we saw the US dollar weaken. But if you look at the recent flow of data coming from the US, growth seems to be sluggish, inflation seems to be downtrending, and we're no closer to that magical 6.5% unemployment rate that the Fed has targeted. So we expect Ben Bernanke to have a more dovish tone in his meeting, and probably what he will be focusing on will be inflation forecasts in the upcoming months of 2013. Now overall, we're expecting him to cut down the inflation forecasts probably to around 1.3% for the rest of 2013, and we're probably expecting the FOMC to announce a cut in growth forecasts by up to 1/4 basis point. Now, what this could mean is that this could see a fresh inflow of fresh inflow into the US dollar, as well as weakness in asset classes such as gold, which is why we're probably expecting gold to have a test of that 1320 to 1350 tranche following the economic projections. But overall, Mirna, what we're telling our investors to do is stay on the sidelines, let the announcement come by, and if Ben Bernanke does in fact have a dovish tone, we can expect the US dollar to make some more gains in trading this week.